Over 50 years, memory was viewed as a brutal, cyclical commodity market. Companies in this space were prone to extreme boom and bust cycles, where periods of high profitability were quickly followed by devastating oversupply and price collapses. However, now the rise of AI has fundamentally changed this dynamic. Micron is transitioning from a cyclical commodity manufacturer into a structural enabler of AI. In Q3 2026, Micron grew revenues by an insane 346%, while net income grew by 1400%. And most insanely, net margin reached 68%. For comparison, during the entire fiscal year of 2024, Micron's revenues were $25 billion. Yesterday, the company reported quarterly revenues of $41.5 billion. So essentially, quarterly revenues today are almost double what yearly revenues were in 2024. 2024 is not even that long ago. This is absolutely stunning growth. As a result, the stock is up over 1,800% in just 3 years. These types of results are unheard of for an industrial company at such scale. Remind me of the stratospheric growth of Nvidia in 2024. In this Micron video deep dive, I will examine what is driving this growth and whether the company remains an attractive long-term investment opportunity. But before that, let me tell you who I am. My name is Ray Myers and I run the Global Equity Briefing newsletter on Substack. I have been writing about finance and investing for close to 3 years now and have over 30,000 followers across all platforms. I cover various investing topics and write about equity research reports. My goal with this YouTube channel is to bring my finance research to a different audience and that prefers videos over long-form text. Now let's continue with Micron. In this Micron deep dive, I will discuss Micron's business model, manufacturing strategy, customers, risks, finances, growth opportunities, analyst estimates, and I will conclude with a valuation model. So let's start with the business model. Micron is the only major American manufacturer of memory chips. And here I would like to put emphasis on the word manufacturer. Yes, there is SanDisk, which makes flash memory, but it manufactures entirely in Asia. In 2026, Micron's products include DRAM memory, high bandwidth memory, NAND flash, and NOR memory. Let's talk about the most important products. DRAM is the short-term memory of any computer system. It provides a high-speed workspace where the processor stores data for immediate access. Unlike storage, DRAM is non-permanent and volatile, so data is lost when power is removed. Now in the attached picture you see Micron's DRAM revenue since 2017, and here we see the DRAM is by far the largest product category, generating $70 billion in sales during the last 12 months, about 80% of total revenue. This is also the primary growth area for the company, with Micron growing DRAM revenues by a mind-boggling 343% in Q2 2006. Absolutely incredible growth. This growth is driven by the fact that memory requirements for AI servers are much larger than that of traditional enterprise servers. While a standard server requires a few hundred gigabytes of RAM, AI-optimized server requires up to 8 times more DRAM memory to handle massive datasets and parameters of huge AI models. Simply put, thanks to AI boom, DRAM has transitioned from a supporting component to the primary enabler of large language models such as ChatGPT and Gemini. Micron's current leadership in this space comes from its 1-gamma node, which is the most advanced DRAM manufacturing process in the world. The 1-gamma node is expected to become the highest volume node in the company history, on track to represent the majority of DRAM bit mix by the end of calendar 2026. This technology provides several benefits for AI. It provides a 45% increase in bit density, allowing more memory in the same area. Secondly, it offers 17% lower latency for AI inference tasks. And lastly, 24% better energy efficiency, reducing the data center power costs. Now let's talk about high bandwidth memory. High bandwidth memory is a specialized type of DRAM that uses vertical stacking architecture to achieve extreme data transfer speeds. So instead of placing memory chips side by side, HBM stacks multiple DRAM dies on top of each other. This stack is then placed on the same package as the AI processor, allowing for a much wider interface, shorter signal paths. Simply put, this ultra-close setup dramatically boosts memory speed, slashes power consumption, helping make AI models smarter, faster, and cheaper. Use cases of HBM include AI training, high-performance computing, and advanced graphics rendering for video games and special effects in movies. movies, let's focus today on AI use cases. In AI systems, HBM is the most critical component because it feeds data directly to the GPU. Without HBM, GPU would starve of data, making it effectively useless for advanced AI. HBM4 is Micron's latest HBM chip, and it began shipping recently in 2026, with more than doubling in bandwidth to 2.8 terabytes per second and max capacity of 64 gigabytes. AI desperately needs HBM4 because the size of model parameters is growing faster than memory technology can keep up. Now let's talk about the next segment, NAND flash. NAND flash is the less advanced technology, but it's still seeing huge demand growth because of AI. NAND flash is the permanent, non-volatile storage technology that retains data even when power is turned off. This is the core technology used in solid-state drives, smartphones, and memory cards to store photos and other data. Unlike DRAM, which is built for speed, NAND is built for high capacity storage. Use cases include storing operating system data, application data, and other large data. Basically whatever the company has that needs to be stored for longer periods of time. For AI, NAND is used to store massive amounts of data needed to train large language models. Also, NAND stores the models themselves. Their sizes now reach trillions of parameters and terabytes of data. The NAND segment generated $20 billion in revenues in the last 12 months, about 20% of total revenues. Similar to DRAM, NAND segment has also experienced stratospheric AI-driven growth, with revenues increasing by an incredible 361% in Q3 2026. And one of the most important use cases for NAND in AI is inference. During the inference process, which is the process of you actually asking AI questions and it generating answers, AI models generate a large amount of temporary data called cache. This is a temporary memory that saves the context of a conversation and generates more relevant answers for you. Let's say you're chatting with ChatGPT about a possible June holiday destination. If you ask in this chat, what about Norway? The results will be radically different than if you ask the same question to a fresh chat or in a conversation about healthcare or tax policy. As these context windows grow from simple conversations about summer holidays to very specific and detailed questions, these conversations reach millions of AI token sizes. This offloading helps to improve user experience for you, the user, and it also reduces operating costs for ChatGPT. It doesn't need to reload the conversation again and again to get the best result. Now we need to talk about an important topic of debate between investors and industry experts. Is Micron cyclical? That's the question. Well, historically, Micron have operated in a semiconductor industry which has long been very cyclical, but the memory sub-segment of that industry has been even more cyclical. When demand is high, prices rise rapidly, as users of memory chips race to secure supply, and this is exactly what we're seeing right now. AI demand is driving a surge in pricing of over 600% as supply can't meet demand. Memory is an input in a final product. You cannot ship a product without memory. This means that often customers have no choice but to simply pay the higher price. Apple cannot decide to ship iPhone without memory. It's impossible, so they just have to pay up. Furthermore, it takes years and $10 to $20 billion to build fabs. Memory makers can quickly and easily increase supply, further driving prices higher. Let's not forget that high prices also incentivize suppliers to increase production. Memory manufacturers all at the same time race to invest in capacity to increase supply. It takes years for the additional supply to reach the market. It does at the same time, and this is often a problem. And the same factors that make increasing supply difficult will make decreasing supply a non-starter. Once built, foundries must operate constantly as the equipment that they spend billions on degrades while interest costs pile up. In this industry, raw material input costs such as chemicals, metals, and labor are a much lower share of total cost than the depreciation of equipment. Simply put, by shutting down their factory, Micron would lose more money than by selling each chip at a loss. Furthermore, Micron's business is also complicated by what the industry calls the bullwhip effect. This is a supply chain phenomenon where small changes in consumer demand for end products like smartphones or PCs result in increasingly large swings in orders as one moves down the supply chain to the semiconductor manufacturer. Let's look at a fictional example. When Walmart runs out of 100 PCs, they make a large order to rebuild their inventory, thinking that strong sales will continue. They make an order for 200 PCs. When the distributor gets an order for 200 PCs, they make an order for 400 PCs with the manufacturer, obviously because they want to have enough inventory to meet future demand. Then the manufacturer receives an order for 400 PCs, call their suppliers to order enough chips for 600 PCs because they also want to have enough inventory to meet future demand. Then this chip manufacturer does the same and builds enough capacity to produce 800 PCs. This happens as growth in orders is seen not only as a proof of current demand, but as an indicator towards future demand. Each party does this because they want to have enough inventory to meet customer demand, as nobody wants to lose sales, something simple like a lack of inventory. But then what happens is that it takes Walmart much longer to sell the 200 PCs they order, so they don't make new orders with the distributor. This creates a cascading series of events. The distributor doesn't make new orders with the manufacturer, and then the manufacturer doesn't make new purchases from the supplier. But the supplier, like Micron, already increased the capacity to meet this demand. They keep manufacturing and the supply explodes and prices collapse even more. Over prices increase demand and the cycle begins again and again. We can see the effects of the cyclicality in this picture. 2020 to 2023, revenues grew by 54% and fell by 51% to 2024. The same happened to NAND. Revenues grew by 27% from 2020 to 2023, then collapsed by 46% in 2024. And this happened as the demand for smartphones, laptops, and tablets exploded after COVID, as everyone who didn't have a laptop had to purchase to work from home. However, it seems that not only the industry might be exiting the low demand period, but entering a period of structurally higher demand. Now let's talk about Micron's manufacturing strategy. Micron is currently making its largest investments in its history to expand manufacturing to meet the massive AI demand. The company has factories in the United States, Taiwan, Japan, Singapore, and Malaysia. And in contrast to Nvidia and AMD, who are pure chip designers, Micron also manufactures its own chips. Micron is currently building several mega fabs to increase capacity for advanced DRAM and NAND. And in the picture now you can see their Clay, New York project. Micron has committed to spending over $100 billion over the next 20 years. Micron is also investing aggressively in Singapore. Both of these plants should be completed by 2028. So clearly, Micron operates in a very capital-intensive industry. This is because the equipment used to make chips is incredibly expensive. For example, a single ASML UV machine costs $300 million, and Micron has to buy dozens of those. As you can see in this chart, Micron regularly spends about $8 to $12 billion on capital expenditures, about $80 billion on capex between 2017 and 2025, which is already huge, but this spending will only increase in the future. Fiscal 2026, Micron increased its capex guidance to at least $25 billion, which is an increase from $15.9 billion it spent in 2025. Here the problem is that some investors are concerned that this could be excessive spending that leads to oversupply. Such spending historically has caused prices to crash. However, management says that they have no choice but to build, because without expanding capacity, Micron cannot increase supply to meet the demand of all the AI hyperscalers. Now, let's talk about who the key customers of Micron are. Customer base has moved from a broad range of PC and computer manufacturers to a concentrated group of high-value customers. And Micron customers can largely be divided into three categories: cloud hyperscalers, device manufacturers, and automotive suppliers. But today we will focus on the cloud hyperscalers. These companies operate massive data centers where AI models are trained and run. Amazon, Microsoft, Google, Meta, and Oracle are the fastest growing parts of Micron's business. And Micron just confirmed an important development that they have signed 16 strategic customer agreements. Previously, memory was sold to an open market or through short-term purchase agreements. During downturns, memory customers could delay purchases or switch suppliers to save costs. This caused a sharp revenue decline and margin compression for memory manufacturer. Micron is shifting to a model where a meaningful portion of its output is covered by multi-year agreements, typically lasting 3 to 5 years. These agreements come with committed volumes, pricing, and supply assurances, so no longer Micron has to leave its destiny to the open market. And now, rather than competing primarily on pricing, Micron is becoming a long-term strategic partner. And the implications, they are really significant. Multi-year contracts will make revenue factor utilization more predictable, reducing earnings volatility and improving the stability of cash flow. Micron may give up some upside during periods of extreme spot price spikes. The trade-off is likely higher average margins over the cycle, better capacity planning, and less severe margin compression during industry downturns. In an effect, the business begins to resemble a long-term infrastructure supplier rather than purely a cyclical commodity producer. A long-term infrastructure supplier could justify a higher valuation multiple. While so far everything sounds nice and rosy, I think the time has come to talk about Micron's competitors. Micron operates in a market that is highly concentrated, as 3 companies control over 90% of the global DRAM market. As you can see in this picture from the research firm Counterpoint, Samsung is the largest overall memory maker with a 36% market share in DRAM. SK Hynix currently holds the second position with a 31% market share. This is the main supplier for Nvidia's flagship GPUs. Meanwhile, Micron currently sits in a third place, a 23% market share, but it's currently working to close the gap. The one player we should really pay a lot of attention on, CXMT, the Chinese challenger, which has a 5% market share. Furthermore, the industry is moving towards HBM4. SK Hynix and Samsung already hold the majority of the initial supply share of Nvidia's Vera Rubin platform. Micron had to resubmit its qualification for this platform. So for your understanding, Nvidia designs the Vera Rubin AI servers that include the Radeon GPUs and Vera CPUs. Nvidia then decides whose memory chips to use in these AI servers. So far, Nvidia have preferred SK Hynix and Samsung over Micron. Meanwhile, in the NAND flash market, the competition is wider, but it's still dominated by a few very large players. Here we see the market share picture from Counterpoint Research. Samsung is first with a 27% market share, SK Hynix is second with 22%, Kioxia is third with 15%, and Micron and SanDisk both have 13%, while the Chinese player YMTC is sixth with 11% market share. Samsung, Micron, and SK Hynix have all underinvested in this technology to pursue growth in the more profitable DRAM segment. So they have been losing market share to SanDisk, Kioxia, and YMTC. SanDisk and Kioxia have a partnership where they share manufacturing capacity, and both have invested heavily to increase NAND capacity. So it is likely that Micron will lose some market share in 26 and 27 until its NAND plants come online in 2028. Now we also have to talk about geopolitics, and especially in 2026 this risk has become more pronounced. And as Micron's supply chain is global with manufacturing and packaging facilities all over US and Asia, any conflict in these regions could significantly increase costs and delay production. Taiwan is especially a major concern. Most advanced chip packaging happens in Taiwan. If there's a military tension in the Taiwan Strait between Taiwan and China, the entire global supply of AI chips could be cut off. And investors, they also should not forget about Trump's tariff, because he can decide to go back to this topic at any moment now. Now it might seem that this topic is closed, but as the Iran war is over, it is likely that Trump will resume the tariff trade war. Another important risk to consider is the risk of overcapacity. We already talked that the memory industry has a history of building too many factories when prices are high, and prices are very high right now. So this leads to a supply glut where there are more chips than people want to buy. When this happens, prices crash and companies lose money, and historically many of them have even went bankrupt. Currently, all 3 major memory makers are increasing their capex. We already discussed that Micron expects to spend $25 billion in 2026. Samsung and SK Hynix are also building new factories that will start producing chips in 2027 and 2028. While currently there's a shortage in the market, this could change fast. If technology improves and makes production more efficient, or reduces AI requirements for memory, and that will crash memory prices. The last risk, and possibly the most important risk that we need to talk about, is of course the AI bubble. Since 2023, the demand for AI hardware has been incredibly strong. However, some investors worry that companies are spending way too much money before they have found ways to make a profit from AI software. And here you see the picture of this AI industry and how connected it is, with everyone buying from everyone and everyone investing in everyone. One specific concern of AI software is efficiency. We saw that with the famous DeepSeek moment. DeepSeek was a Chinese large language model developer who released a model that was supposed supposedly significantly cheaper to train and run than the legacy Western models. If new software techniques allow AI models to run on much less memory, the demand for Micron's most expensive chips could drop. We talked about Micron's business model and the risks to this model, but now let's talk about finances. In fiscal Q3 of 2026, revenues jumped 74% quarter-on-quarter and 346% year-over-year to $41.5 billion. This is absolutely stunning and incredible growth. Just for comparison, during the entire fiscal year of 2024, Micron's revenues were $25 billion. Yet yesterday, the company reported quarterly revenues of $41.5 billion. So essentially, quarterly revenues today are almost double what yearly revenues were in 2024. 2024 is not even that long ago. This is absolutely stunning growth. Looking at different segments, you see that DRAM revenues jumped 67% quarter-on-quarter and 343% year-over-year to $31.3 billion, while NAND revenues jumped 99% quarter-on-quarter and 361% year-over-year to $9.9 billion. And the most interesting thing was that this growth was driven by pricing, not by volume growth. For example, DRAM bit shipments grew only 2 to 3%, whilst pricing grew over 60%. Meanwhile, NAND bit shipments grew a bit faster, around 5 to 7%, while pricing grew over 80%. Such level of growth has enabled Micron to achieve absolutely stunning margin. Gross profit margin grew from 38% in Q3 2025 to 85% in Q3 2026. As I mentioned previously, building factories is the most expensive step. Once they are built, each additional dollar of revenue is much more profitable. It costs Micron only 15 cents to build $1 of memory chips. Meanwhile, operating margin went from 23% to 80%, and net profit margin went from 20% to 68%. This is an incredible operating leverage. But now the next question should be, is this sustainable? The answer is most certainly that these margins are not sustainable. They are not sustainable. No company in history could sustain 68% net income margins in the long term. This is significantly higher than even Nvidia right now. Margins will come down eventually. The only question is how high they can get before a reversal and when the reversal will be. It will go higher, and the crazy thing is that operating margin will likely reach 90% in the next quarter or two. This is because Micron has indicated that the memory shortage will persist past 2027. Now let's talk about next quarter's guidance, but I'm going to teach you that it's absolutely incredible and insane. So for fiscal Q4 2026, Micron expects revenues of $50 billion. This implies a 20% quarter-on-quarter growth and 342% year-over-year growth. At such a scale, this is absolutely insane guidance, and I've never seen anything like this before. And the only thing I can think that comes even remotely close, Nvidia. When during the AI boom, it kept growing by 200%, but even they were not growing at 300% and achieving such insane margins. Additionally, the company expects adjusted EPS of $31, and this implies 1,000% year-over-year growth rate. This is simply insane. Well, let's talk about Micron's growth opportunities. Experts at Mordor Intelligence forecast DRAM market to grow with 14.86% CAGR to reach $248.7 billion in 2031. Overall, a comparable megawatt capacity AI data center needs 6 to 10 times more memory. Considering the current AI data center development trends, this bodes well for Micron's future demand. Hyperscalers like Google, Microsoft, Amazon, and Meta are investing hundreds of billions of dollars. In total, these 5 companies alone are expected to spend $700 billion in 2026, $874 billion in 2027, and $900 billion in 2028. A significant share of this spending will go straight to Micron's pocket. Just from this, Micron could become one of the largest companies in the world, if not the largest company in the next year or two, which is absolutely insane. As a result of this insane demand, the stock prices of all the memory stocks have absolutely exploded. The crazy thing is that looking at the forward price to earnings ratio, they still seem deceptively cheap. The low forward PE for memory companies like Micron and Samsung shows that investors are worried that the current high profits will not last. This is a cyclical discount. Investors pay a lower price for these earnings because they believe that there is a high probability that chip prices will eventually fall. However, the long-term deals that Micron have signed signal that might not be the case anymore. Now let's look at the analyst estimates. Analysts expect that Micron's 2028 revenues will reach $207 billion, a 130% increase from today. Meanwhile, EBIT and net income are expected to reach $160 and $148 billion. Most importantly, free cash flow is projected to explode by 259% to $94 billion as Micron's capex investments slow down and begin generating strong returns. Taking this into account, Micron trades for about 9 times its 2028 earnings, 14 times its 2028 free cash flow. There's one important point though that we need to discuss. Analysts expect that supply shortage will ease in 2028. This is why you see the 6% growth expectation for 2028. Yet the CEO of Micron just said in an earnings call that he expects the supply shortage to continue past 2027. I know it sounds wild that $207 billion revenue and $160 billion net income estimate for 2028 could be low, but it's starting to look that way. Let's build a quick 2028 valuation model to see where the stock could go. Micron is experiencing a stratospheric revenue growth, but it has to slow down eventually. You can't grow at 300% year over year. So I model 215% revenue growth in 2026, 70% in 2027, 25% in 2028. These assumptions result in 2028 revenues of $250 billion. I know it sounds insane, but this is where this company is going. And because the demand is so strong, Micron has immense pricing power, resulting in an incredible margin. However, that can't last forever. So I model it peaking at 85% in 2028. I know it sounds crazy, 85% operating margin, not gross margin, but this is where it's going. After 2028, Micron will likely be forced to lower prices to sustain revenue growth, keep market share, resulting in lower margins, especially as more capacity comes online in 2028. In my opinion, memory business is still cyclical, only this time the cycle will be much larger, and there will be a year when revenues fall 50%, but I can't tell you when that will be, but likely not soon. Nevertheless, with the way that the AI boom is going, I don't believe it will happen by 2030. It could be 2032 or 2035. However, I'm not a wizard, so I can't say with absolute certainty as it is incredibly difficult to predict. Not many industry experts predicted the 2023 memory glut, and even fewer predicted the current AI boom, and I'm not an industry expert. So with that out of the way, my assumption result in 2028 operating income of $213 billion. I model tax and net interest cost of 20%. We get to net income of $170 billion. With an exit multiple of 20 to 35, we are looking at a target share price of $3,000 to $5,300. That would give us an upside of 146% to 330%. Discounting that back at 14% per year, we get a fair value per share of about $2,000 to $2,800. That would imply that at today's share price, Micron trades for a 22% to 55% discount to its fair value. That seems decent to me considering the current AI boom. However, this valuation assumes that memory trends don't change. As I mentioned in the risk section, there are some scenarios in which that doesn't happen. At the same time, considering all the opportunities for growth in the automotive industry, the requirements for memory for on-device AI, the massive growth of AI data centers, this model might also end up being too low. I know it sounds crazy, over $200 billion in operating income, but there is a realistic scenario where my assumptions are too low. In summary, Micron is positioned to be at the center of the most important growth story in human history. The company is signing long-term agreements, hyperscalers, and is positioning itself to make its business more durable and less cyclical. The AI demand is incredible, but of course we have to see how long it lasts, and the end is always uncertain. Thank you for watching. This is my first long-form deep dive. I hope you liked it. I hope you enjoy it. I hope you subscribe me for more, and I see you in the next one. Bye!